SABMiller has more than doubled the markets in which its beer brand Chibuku is now available. Now, following an investment of $16 million over the last 18 months, it's expected that Chibuku volumes across new markets in Africa will total well over 500,000 hectolitres. For more on this, we'll have Julian Wentzel joining us from London. But first up, let's get your views on this story. I suppose a feel-good story when you talk about the whole of SABMiller, because it's still a small part of its business. But it's an interesting move that it's made.
No, it is an interesting move, and they're certainly pushing a brand, another brand aside from their stable brands into the rest of Africa. But I just want to say, ironically, you've got two Muslim guys sitting on the desk tonight talking about SAP.
Yeah. So no strong feelings towards any of these kind of brands in SABMiller like Castle and everything. But if we're talking about, money-wise and the money they have been spending, they talk about $16 million. They talk about overall spending $300 to $500 million per year on investment purely in Africa. I suppose the question is, is this money starting to pay off? Is it money well spent? And I suppose if you look at the numbers in terms of growth, one might argue yes.
Yeah, I think if you look at the growth that's come through, absolutely it appears as though that trajectory continues to give them some strong momentum. That being said, again, it's not surprising to see them looking towards your more emerging markets where the bases are low, where the markets are not as well developed or penetrated for that growth. And I think that's a trend you're starting to see across a lot of your larger companies that have played in your developed markets for quite some time. Those markets are mature, and now they're going to have to look elsewhere to start delivering stronger shareholder returns as well.
I mean, just looking at their overall earnings coming through from Africa, I think it's 11% of revenues right now. You've got other players in Africa that are also being aggressive. There's the Heinekens, there's the Diageos, and you got to look at the type of money they're also spending.
Well, it's return on investment, and SA breweries have certainly shown that in emerging markets they get a good return on investment. In the US, it took them 8 to 10 years to get up to that level of return, which was about 12% for the US. But in emerging markets, they've proven to be very patient players. They know Africa, they understand Africa, the distribution challenges, etc. Yes, Heineken and Diageo can poach people, but I don't think they have that corporate memory in terms of how to deal with distribution challenges that you will have in some African countries, because the road networks aren't well developed, etc. And how do you actually move your product around? SA Brewery certainly has that competitive advantage for Africa, and I think they will have faster growth than the other two.
It's interesting, when you're talking about that memory in terms of understanding the market. This is a traditional beer, but one of the analysts today is saying that they're not so convinced about it because you've got a growing middle class, you've got a growing aspirational class, and perhaps they might not want to drink traditional beer, choosing more the sparkly beer types or those kind of beers as they move up the income ladder. Do you think that kind of comment is something that would be valid? How would you evaluate that?
Yeah, I think if you look at that, you've got to serve a much wider market than just a particular subsegment. Certainly, you're going to have that aspirational aspect coming through. People are going to want to move up that value chain. That being said, I think there's still a largely underserved market when you look at that traditional beer kind of segment. And I think it's quite an astute move on behalf of SAB to say let's actually widen the value chain that we're offering out there in these markets so that they're more kind of integrated into what's culturally acceptable.
Well, let's commercialize beer that people are already drinking.
Agreed, and then look at migrating them up the value chain over a period of time as incomes increase and as tastes evolve.
Your views on SABMiller in light of concerns around supply side costs?
Look, as far as supply side costs go, they've been very good at managing that in the past, and I think that they will certainly step up to that challenge. But what I wanted to say is that SA Breweries owns a number of brands up that value chain, and you speak about the middle class wanting to have a certain type of drink. They've had that experience in sub-Saharan Africa. So that will, again, goes back to the corporate memory. They will be able to take advantage when they see those opportunities coming along.
What about the stock trading levels right now?
I think it's a bit on the expensive side, but then breweries has rarely ever been cheap. It has outperformed over the past year, so you may get another period of outperformance, but then if you look at the history of breweries over 40 years, there are periods that it lags, especially post the purchase in the US. And I think, if they do another big one going forward, there may be a price lag for a while as performance catches up to the price.
Well, we've got Julian Wentzel, Head of Research at Macquarie, joining us from London. Julian, good to have you on the show today. So we've been talking about this move in terms of growing this traditional beer, Chibuku. Just give us your views on the potential that this beer holds in Africa in terms of growing earnings for SABMiller.
I think, Bronwyn, this is part of a strategy that they put in place, which I think is an amazing strategy of half the cost of beer and double the price of beer. So what they're doing is they're using their full portfolio that they have of product. That includes the introduction of sorghum beer, which enables people to enter into the beer market, and the introduction of their high-end products like Castle Light, which helps on the aspirational side of the equation. So from my perspective, this gives you an enormous growth vector. I think it provides, I think, an amazing canvas for the business in Africa. Africa, I think, once dubbed the Dark Continent, offers, I think, for many companies today, a massive opportunity to tap into a population of close to 1 billion people.
So Julian, what or who is SABMiller's biggest threat in Africa right now?
I suppose both Heineken and Diageo are significant threats. In both instances, I think their own portfolios need to be expanded and they need to develop a much greater price ladder. At the moment, neither of them have an offering at the bottom end of the market. If one looks at Africa as an opportunity cost of labor in terms of the way in which you would purchase beer, so for instance, if you did an amount of hours of labor work to buy a beer or afford a beer, in Africa it can cost up to, say, 5.5 hours of labor for a standard lager beer. And from that perspective, I think SABMiller has an enormous advantage. Where both Diageo and Heineken have a significant advantage is in Nigeria. They have an established business in that market. SAB are the late runners to Nigeria. Their business has grown exponentially, but it will always remain a small, niche, regional player in Nigeria. I think the scale opportunity in Nigeria is lost to them.
Just, Julian, just a question from me is that, naturally we can have a great company here, but as we discussed a little bit earlier, it has had a phenomenal run. It's never really been cheap. If you look at it on a technicals basis, it's in a rising channel, just reversed off the top end of that channel. Your view on what you'd see as a target price for the stock over the next 12 months, and do you think there's a decent buying opportunity now, or would you wait for a bit more of a pullback?
Look, I think the performance of SABMiller has been exceptional. It offers a unique blend of both growth and defensive qualities. In a market that is beset with risk, I think a lot of investors have sought out SABMiller because it offers a wonderful opportunity to acquire high growth exposure at the same time offering significant defensive qualities because de facto it has a captive audience in terms of customer base. From a pricing point of view, our price target is $25.50. So we don't think there's significant upside in the near term, and it hasn't had a spectacular run. Many have argued that part of that run has been some bid speculation, a bid by ABI. My view is that it just really reflects the quality of the company. And at the end of the day, quality never comes cheap. And particularly in a risk-averse environment, people are prepared to pay a premium for quality.
Julian, just getting back to that Nigeria story, because I think it really is an interesting one, being a late runner there, not really being able to achieve scale. How significant is that going to be for SABMiller as it goes forward in being a lot more aggressive in terms of focusing on Africa?
I think certainly, Bronwyn, from Africa's perspective, I think they're going to focus on the markets outside of Nigeria. I think Nigeria is a significant missed opportunity. If one casts one's mind back to the 1990s where they banned the importation of malt, the beer market in Nigeria collapsed from about 18 million hectolitres to about 5. My view is that that market could easily be a 50 million hectolitre market, so that market could grow 3, 4, 5-fold in the next decade. So it's a massive growth opportunity. It is a missed opportunity for SABMiller. Very difficult to enter a market where you've got two very competent competitors like Diageo and Heineken with entrenched positions. They're always going to be the late runner, the number 3 player in the market. And I think the strategy that's been put in place of being a regional player in that market is the right one. I think the expense of entering that market in a head-on strategy against both those parties will be money not well spent.